Hey everyone, EVgo reported second quarter earnings results that sent the stock price soaring. The stock price, in fact, was up over 20% on the day following this earnings announcement. Was that stock price increase justified? I'll answer that question in this video. Also, I'll update my recommendation of EVgo stock. Coming into these results, I did not have EVgo stock rated as a buy. I had it rated as a hold. So you're going to want to tune in to see if I'm upgrading EVgo stock's recommendation following this phenomenal quarter. So let's get right into it. Total revenue increased by a whopping 457% for EVgo in Q2 to 50.6 million. An excellent growth here for revenue for this company. Operating loss improved from 37 million in Q2 last year to 33.6 million in Q2 this year. I would have liked to have seen better improvement in operating loss given how much revenue increased. However, I will be content with the fact that the company did improve its operating loss. It reduced it. It got closer to profitability rather than moving in the opposite direction, which a lot of companies that are growing revenue this rapidly tend to do. They tend to go in the opposite direction when their revenue expands higher. So it's good news that operating loss narrowed for EVgo. The company ended the second quarter with approximately 3,200 stalls in operation or under construction. That was 210 additions for the quarter. So solid growth in their charging stalls or charging stations. And remember, we are nowhere near saturation in charging stations. We're going to need way more charging stations, charging stalls for several years more if we are to transition to an electric vehicle fleet. Right now, we are at less than 10% of global vehicles worldwide at electric vehicles. So if we're going to want to transition over to complete EVs, we're going to need a lot more charging stations in order to support all those electric vehicles. The company added approximately 82,000 new customer accounts to reach 688,000. That was an increase of 55% year over year. So the company's doing a good job of attracting new customers as it's adding new stations and it's making partnerships. Primarily, it's got a partnership with GM where GM vehicle owners can use its charging station. So that's the kind of deals the company needs to make to expand its reach, to expand its network. Now, one of my concerns with EVgo is that it's a capital intensive business. It's going to take a lot of cash to build out its network. And so far, year to date in 2023, it's already spent $100 million in capital expenditures. That was up from 72 million in the same time in 2022. So think about it. It's spent twice the amount of revenue that it's brought in. It's spent on building out its network of charging stalls. So it's going to take a lot of upfront investment from EVgo, and then later on it's going to reap those benefits, hopefully, from those charging stations, charging stalls, generating revenue as people use them to charge cars. Here's another disappointment for this quarter, and it was that the company's forecasting 2023 revenue of 135 million. It's already generated revenue of about 75 million so far this year. So that means the second half of the year, if it was to meet this 2023 forecast, the second half of the year, the revenue would be less than the first half of the year when the company's doing such an excellent job of accelerating revenue. So that was a bit concerning and a bit maybe management wants to be conservative and not giving such a elevated target for revenue, but I was a little concerned with that. I was expecting, with such a phenomenal quarter, I was expecting a boost to the forecast for 2023. And the company's forecasting to have 3,700 stalls in operation. Both of these numbers, by the way, are at the midpoint by the end of the year. So that's a good forecast. So that would, if they were to hit that 3,700 stalls, that would be a 500 increase from the 3,200 they have right now. And that would be an increase from the pace from the second quarter. Remember, in the second quarter, they noted that they added 210 stalls. So to reach 3,700, they would need to do 250 and 250 or 200 and 300, but it would be an increase from the pace so far in the second quarter. Now, to update my recommendation of EVgo stock, I'm going to keep the stock rated as a hold. I think they had a very good quarter, and it was certainly justified to have the stock price increase as it did because of how much revenue increased, because of the narrowing of the operating loss and the added customer accounts. And they also got a $16 million award, a grant to add new stations. So that was also good news. I didn't include here because I wanted to save the space for these figures I thought were more important. But a very good quarter, to be sure, for EVgo that justified a stock price increase. But the valuation is still not cheap. Even though it's down off its high, it's not cheap. And I would like to see more progress from the company in narrowing its operating loss before I'm going to recommend this stock as a buy. So for now, I'm keeping the stock rated as a hold, but I am fully acknowledging that this was an excellent quarter for the company, but it's reflected in the stock price now because the stock price jumped by 20%. So now the stock is 20% higher than it was before these earnings came out. So there you have it. That's my earnings review and my recommendation staying the same for EVgo stock. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.